Well, Sterlite Tech reported a weak set of numbers in the third quarter of financial year 2020 on account of lower volumes and prices in the product business. However, the company is expecting a growth in its revenue and EBITDA starting in the fourth quarter of financial year 2020. To help us decode the key factors at play for Sterlite Tech in the quarter gone by and to give us details on the outlook, joining us now on the show is the Group CFO Anupam Jindal. So, sir, to start off with, what is your assessment of the quarter gone by, that is the third quarter of financial year 2020?
Sure. So I think quarter three has gone broadly in line with what we had sort of communicated at the end of our Q2 earnings. And we are excited to see that there are a lot of developments which are happening, particularly on order book side. We secured a large order of 1100 crore from T-Fiber, which is going to give good visibility and confidence for numbers going forward. And this is part of overall 1800 crore of project. 700 crore order will come about 9 months from now. Apart from that, we continue to position ourselves as true data innovator company, data network solution company, and we continue to win many new customers in new geographies. And in addition to that, we continue to leverage the recently acquired company IDS, which we had acquired in UK in September 19. Through that, we are making further inroads into our new segment data centers, which is very large opportunities. Overall, while from number perspective, it looked low, but this is again in line with what we communicated, and we are looking at a very bright Q4. We see this Q3 is the lowest quarter in the current year or in the recent times, and we don't see further challenges coming in. Our order book at the end of Q3 stand at 8,500 crore, which again is an increase over 8,100 crore at the end of Q2. So overall, I think we are looking quite positive. Business continues to be very positive from both domestic as well as international fronts.
So, in the third quarter, what was the main reason behind this decline in revenue? Was it only the lower prices, or also because your order book was declining, the revenue has come down a bit in the third quarter of financial year 2020?
So Q3, I think both the factors played out, some volume dip as well as some realization. So that was the major reason. But as I said, that this again was sort of anticipated in the beginning of Q3 itself. And we are now having good visibility in terms of volumes. Realizations are at the current level. We are quite comfortable at the current pricing, and we believe that as long as volumes can come, we can still deliver significant growth from here on.
So what makes you so confident that from the fourth quarter, your revenue and absolute EBITDA will be higher compared to last quarter? What are the factors that are playing out?
See, yeah, that's very important question, because one, that volume, which I said that will definitely improve over Q3. In addition to that, our service business is also going to see higher revenue on the basis of the order book which we are carrying. We are also anticipating many large orders to be coming in Q4 and going forward. So these are some of the basis, I would say. We are expecting Q4 to be far better than Q3.
Okay. Margins in the third quarter have yet again declined. Your margin expectations have also toned down a bit from 20% earlier to now 18 to 20%. What are the main reasons behind the same? And if you could give us some guidance for FY21 margin, and also what is the kind of margin that you're seeing for the product business and from the service business?
Sure. So in terms of margin, I won't say that the margin has come down. In fact, it is at the upper end of 18 to 20% range, which we had communicated almost about a year back. And I'm happy that not just in this quarter, but YTD also we continue to be upwards of 20%. For full year in 19-20, we are also looking at in this range, and maybe at the upper end of 18 to 20%. Going forward, the businesses at a company level are consisting of two domains. One is fiber and fiber cable, where we continue to hold global top 3, top 5 position. And that's very important in this current challenging time. Because of the investment, positioning and customer connect we have been able to hold on to reasonably good performance in that segment also, where we still continue to make 22% kind of margin in Q3. And we look forward to similar kind of margin to be maintained or maybe better going forward. In the services business, broad margin range is about 15%, and we believe that that can be maintained over a period of time with the increasing revenue profile which we are having.
Okay. Sir, how have been the fiber and the cable prices currently? Has there been any uptick or have they remained stable in the recent times?
I would say that industry is bottoming out already, and we are looking at the stabilization of demand, and maybe from 3 quarters from now, we are looking at good amount of demand coming back on the basis of 5G rollouts, which are starting to happen all over the world. Many countries and companies are actually rolling out their 5G implementation programs, so that's a big opportunity opening up from fiber perspective. And since we already have invested in our capacity expansion, we are looking forward to that kind of opportunity where we will be able to utilize the capacity far better from current levels, and that will definitely provide a good amount of growth. On the cable side also, we have our capacity expansion plan on track. We are completing our expansion from 18 million kilometer to 33 million by June 2020, which will also come in time for this demand upcoming, which is there. So these are the 2-3 things which are happening. On realization side, I have said that realization from our perspective is closer to $6, which is at this level also we are able to make reasonable margin, which is quite good. With volume increasing and maybe demand coming up, prices may also improve and margin may also improve from here on. So we are looking at not just good Q4, but even going forward FY21, we are looking at quite positive.
Okay. So what were the utilizations, overall utilization at current levels, and what are your expectations of utilization for financial year 2021?
Overall, for the current year, I would say our utilization has been broadly at about 90% of the existing 30 million capacity. On the expanded capacity, definitely we need to start looking at some utilization as we see volume uptick coming in maybe from Q4 or next year. As far as FY21 is concerned, we are looking at expanded capacity of 50 million to be utilized close to 75 to 80%.
Okay. So if you could give us some idea on the new markets that you're planning to enter and what is the kind of initial response that you're seeing currently?
So we are investing as a part of our strategy to further go in international markets for a long time, and we continue to explore new markets. As you would see, China and Europe, these are the 2 large markets we have from our fiber and fiber cable perspective. But we are looking at our services business, which is becoming a new engine of growth, which has also become quite significant from almost like 350 crore of annual revenue in FY16 to a run rate of about 2,600 crore in the current year. This is poised for a big growth. For this business also, we are now looking at going in international market. Apart from that, we are looking at Middle East and Southeast Asia as new market territories with more focus, Africa and Americas, both North and South. So these are the kind of new territories we are looking at for all of our products and offerings. We are getting very good traction from these some of these customers who are based in these countries. We have a marketing and sales team present there. We have our application engineer present there, and we are having great amount of engagement with them. And I'm sure the opportunities will unfold for us. We will be able to take larger share of opportunities from these markets.
Okay. So how much of your Indian Navy and Mahanet project has now been completed, and are you expecting new orders to come in?
Definitely. I mean, we are looking at overall pipeline to grow on services business significantly. We are also looking at significant amount of growth. As I said, that we have already grown the business more than 7 times over last 4 years itself, and we are looking at more than 40 to 50% annual growth in FY21 in terms of revenue in the services business alone. So that is on the basis of the work we have done so far, on the basis of orders which we have already in hand, and on the basis of opportunities which we have participated, not just in the public enterprises, which are large enterprises, but also private enterprises. We are having active engagement with some of the cloud companies through our acquisitions and ideas, and many such opportunities as we are evolving in a true data innovator network company where both wireline and wireless are becoming part of our offerings. And that is actually allowing us to have the larger canvas of opportunities from almost like $10-15 billion today, which we can address today, to almost becoming $75 billion by 2023. In the near term also, we are looking at this $15 billion market for us to become like $20 to $25 billion over next year.
Lastly, sir, by when are you expecting a revival in the fiber demand?
See, I've been maintaining that fiber demand is going to get revived in calendar 20, which is already started, maybe in the latter half of calendar 20. For us, in terms of financial year, it may start happening from H2 more meaningful manner.
Well, that would be all, sir. Thank you for speaking to BloombergQuint.
Thank you.